January 2025. Nvidia is the most valuable company on Earth. Silicon Valley feels invincible. Then, a guy you've never heard of, in China, ships a free AI model. It matches the best America has. And in 72 hours, Wall Street loses $1 trillion. This is the story. Hey, I'm Rahan. This is the Stack Story. Long-form tech told as stories. Today, how a Chinese hedge fund wiped $1 trillion off the AI trade in 3 days. Let's go. Monday, January 27, 2025, 9:30 a.m. Eastern. The opening bell rings on Wall Street. And within 30 minutes, the most valuable company on planet Earth has lost more money than the entire GDP of Switzerland. Nvidia, the chip maker that built the modern AI boom, drops 17% in a single trading day. $589 billion in market cap gone. It is the largest one-day loss of market value by any company in the history of the United States stock market. And the reason has nothing to do with anything Nvidia did wrong. The reason is a free model released by a company nobody on Wall Street had heard of, in a country that wasn't supposed to be able to do this. To understand what's about to happen, you have to understand what the world believed on Sunday, January 26, 2025, the day before. Everyone, investors, regulators, journalists, Silicon Valley, was operating on the same set of assumptions. Building a frontier AI model costs hundreds of millions of dollars. You need tens of thousands of Nvidia's most expensive chips. You need a multi-year head start. And critically, you need to be in America. Or at least in an American company. 5 days earlier, on January 21, President Donald Trump had just returned to the White House. And the very first major announcement of his second term, standing alongside Sam Altman, Larry Ellison, and Masayoshi Son, was Project Stargate, a $500 billion joint venture to build out AI infrastructure across the United States. $500 billion with a B. Trump called it the biggest AI infrastructure project in history. The message was clear. America was going to win the AI race by spending so much money that nobody else could compete. And nobody benefits from that worldview more than Nvidia. Jensen Huang, the leather-jacketed CEO, has spent 2.5 years on a victory lap. Nvidia's H100 chip, and now the newer Blackwell line, are the single most important piece of hardware in modern AI. Every model OpenAI trains, every model Anthropic trains, every model Meta trains, runs on Nvidia silicon. The company's market cap has gone from about $500 billion in early 2023 to roughly $3.5 trillion by the end of 2024. The stock is up over 800% in 2 years. The narrative is bulletproof, until it isn't. Now layer in one more thing. In October 2022, the U.S. government banned the export of Nvidia's top AI chips, the H100, the A100, to China. The thinking was, if China can't get the best silicon, China can't train the best models. So the West gets the frontier. China gets the leftovers. Nvidia, in response, designed slightly weaker chips, the H800, the A800, that fell just under the export control thresholds, so they could still be legally sold into the Chinese market. Smaller, slower, cheaper. The chips you use when you're not supposed to be playing in the big leagues. So picture the world on January 26th. America has Stargate. Nvidia has its monopoly. OpenAI has GPT-4, O1, and a fresh $100 billion investment cycle. Anthropic has Claude. Google has Gemini. The American AI industry is operating on a fortress mentality, sky-high valuations, massive moats, and a deeply held belief that nobody outside this club can catch up. And on Sunday night, that belief is about to shatter. Enter a company called DeepSeek, spelled D-E-E-P-S-E-K. If you'd asked the average Silicon Valley engineer about DeepSeek a week earlier, you'd have gotten a blank stare. They're not famous, they don't have a glossy office, they don't run Super Bowl ads. They were founded in May 2023 in Hangzhou, China, by a 39-year-old guy named Liang Wenfeng. And here's the part that nobody in San Francisco would have believed. DeepSeek is a side project of a hedge fund. Liang Wenfeng is not your standard AI founder. He grew up in Guangdong Province, southern China, in a working-class family. His father was a primary school teacher. Liang got into Zhejiang University to study electronic engineering, then graduated with a master's degree in 2010. While most of his classmates went into traditional tech jobs, Liang went into finance, specifically quantitative trading. The idea of using machine learning models to predict markets. In 2015, he co-founded a hedge fund called High-Flyer. High-Flyer was an early mover in China's quantitative trading scene. They used AI models to make trading decisions, long before that was fashionable in Chinese finance. By 2021, they were managing tens of billions of dollars in assets. They had stockpiled thousands of Nvidia GPUs, originally to run their trading models. And then, Liang did something most hedge fund founders never do. He decided his trading firm should fund pure AI research, not for the trading, for the curiosity of building frontier models. In 2023, he formally spun out DeepSeek as a separate AI lab. Same parent company, same GPU pile, but a completely different mission. Try to build models that rival the best in the world. There's a reason this story comes out of a hedge fund and not a traditional tech company. Hedge funds, especially quantitative ones, have something most startups don't: patient capital. High-Flyer isn't accountable to a board of VCs demanding a return in 5 years. It's accountable to its own profit and loss statement. If Liang wants to spend $100 million of his trading profits on AI research with no immediate commercial product, he can. He doesn't have to pitch a Series A. He doesn't have to manage burn rate. He doesn't have to justify quarterly metrics. He just has to keep the trading desk profitable enough to fund the science. And he does. For nearly 2 full years, DeepSeek runs as a pure research shop. No enterprise sales team, no marketing department, no investor calls. Just engineers, GPUs, and papers. The other thing High-Flyer had was the ability to hire the best young AI researchers in China without having to compete with the salaries Western big tech was paying. Many of DeepSeek's engineers are recent PhDs from Tsinghua, Peking, Zhejiang universities. People in their 20s. People who, in another life, might have been working at Google or Meta in Mountain View, but for visa reasons or family reasons, or just preference, chose to build their careers in China. Liang's pitch to them, reportedly, was simple. Work on the most interesting problem in the world, with no commercial pressure, with as many chips as we can possibly buy you. It worked. For most of 2023 and 2024, DeepSeek operates almost entirely in the shadows. They publish papers. They release some open-source models. They get respected inside the niche AI research community on X and Hugging Face. But the mainstream press, Wall Street, nobody is watching. In December 2024, they release DeepSeek V3, a 671 billion parameter mixture of experts model. Strong benchmarks, open weights. People notice, briefly, but the world still assumes American labs have the lead. Until DeepSeek drops R1. On January 20, 2025, DeepSeek publishes a paper. It's called DeepSeek-R1, Incentivizing Reasoning Capability in LLMs via Reinforcement Learning. The title is academic. The contents are dynamite. The paper claims they've trained a reasoning model, a model that thinks step by step before answering, like OpenAI's O1, using a brand new technique they call GRPO. Group Relative Policy Optimization. They've used reinforcement learning to teach a model to reason without needing the massive supervised dataset that OpenAI famously kept secret. And the benchmarks they publish on math, on coding, on logical reasoning match or beat OpenAI's O1. The model that, until that moment, was considered the absolute frontier of AI reasoning. On January 27th, DeepSeek does the second thing. The thing that turns a research paper into a market event. They release the actual model weights to Hugging Face. Open, MIT license. Anyone in the world can download R1 and run it themselves, for free, forever. This is not how Silicon Valley does AI. In Silicon Valley, you build a frontier model. You lock it behind a $20 a month subscription. You guard the weights like military secrets. DeepSeek just hands it out for free, and the AI research community immediately loses its mind. Within hours of the weights going live, researchers on X are downloading R1, running it on their own machines, and posting screenshots. Benchmark after benchmark, R1 hangs with O1, sometimes beats it. On certain math problems, on certain coding tasks, the Chinese open-source model is genuinely competitive with the most secretive, most expensive model OpenAI has ever shipped. And then someone digs through the technical report and finds a number that makes everyone stop scrolling. In the paper, DeepSeek discloses what they say it cost to train their V3 base model, the foundation R1 is built on. The number is $5.576 million in GPU compute, just under $6 million. For context, OpenAI, Anthropic, and Meta are widely believed to spend hundreds of millions to $1 billion on a single training run for their frontier models. Sam Altman has publicly said GPT-4 cost more than $100 million. Meta is rumored to be spending tens of billions a year on AI infrastructure. And here is a Chinese hedge fund working under U.S. export controls on weaker chips, releasing for free a model that matches the frontier, and saying they did it for the price of a small Manhattan apartment. Let me try to explain what DeepSeek actually did, without the jargon. Most large language models are trained on basically every word humans have ever written and then taught to be helpful through massive amounts of human feedback. Hire thousands of contractors. Pay them to rate model outputs. Use those ratings to fine-tune the model. It's expensive and it's slow. DeepSeek's R1 breakthrough was a different approach. They took a base model and threw it into a reinforcement learning loop. Give it a math problem. Let it generate an answer. Score the answer automatically. Was the math right or wrong? Adjust the model based on the score. Do this billions of times. Skip the army of human labelers. Keep the supervised fine-tuning dataset. Just let the model figure out how to reason by rewarding it when it gets things right. The technical name for their method is GRPO, Group Relative Policy Optimization. The plain English version is, the model taught itself to think harder by being graded by another version of itself. And it worked. Cheaper, simpler, faster. The kind of breakthrough that, once it's published, everyone immediately tries. How did they pull it off? Part of the answer is the H800. Remember those export-restricted, weaker Nvidia chips? DeepSeek reportedly trained R1 on a cluster of about 2,000 of them, 2,000 800s, versus the tens of thousands of H100s American labs use. Their engineers wrote custom CUDA optimizations to squeeze every last drop of performance out of slower interconnects. They used a numerical format called FP8 to cut compute requirements roughly in half. They built a sparse mixture of experts architecture where only a fraction of the network activates per token. None of these techniques are secret. None of them are even particularly new. DeepSeek just put them all together at a scale and a polish that nobody outside China had thought possible on second-tier hardware. And that's the part that scared Wall Street the most. By Sunday night, January 26, the story has bled out of AI Twitter and into financial Twitter. Hedge fund quant accounts are warning their followers. Posts are racking up millions of views. Futures markets, the markets that trade overnight ahead of the next day's open, start drifting south. By 3 a.m. Eastern, Nvidia futures are down 5%. By 6 a.m., they're down 10%. The pre-market chatter is one word in every Slack and every WhatsApp group on Wall Street. DeepSeek, DeepSeek, DeepSeek. 9:30 a.m. Eastern. Monday, January 27. The opening bell. And the floor falls out. Nvidia opens down 13%. By 10 a.m., it's down 15%. By midday, it's down 17%. The stock that everyone on the street had loaded up on closes the day at $118.42 per share, down from $142. That 17% move erases $589 billion in market capitalization. To say that again, $589 billion of paper wealth gone in one trading session. It is the single largest one-day market cap loss for any company in the history of the United States stock market. No company has ever lost this much value in one day. Not in 1987, not in 2000, not in 2008, not in 2020. This is the new record. But it isn't just Nvidia. Every name connected to the AI trade gets hit. Broadcom drops 17%. Constellation Energy, a power company of all things, because everyone had been betting on a data center electricity boom, drops 21%. Vistra drops 28%. ASML drops 6%. Oracle drops 14%. Microsoft, Meta, Google all get knocked down 3 to 5% each. And on companies their size, that's still tens of billions of dollars per stock. By the end of the day, analysts estimate that AI-exposed equities have lost roughly $1 trillion in combined market cap. $1 trillion in one trading session. Wrap your head around that for a second. The entire AI trade, the most crowded trade in modern American markets, got punched in the face on a Monday morning. Not because of an earnings miss, not because of a regulatory action, not because of a recession, but because a paper and a set of model weights from a Chinese hedge fund side project suggested that the entire moat the American AI industry had built around itself might be narrower than anyone thought. The reaction is fast and public. Marc Andreessen, the venture capitalist, the founder of A16Z, one of the loudest voices in Silicon Valley, posts on X. DeepSeek-R1 is AI's Sputnik moment. That's the phrase that defines the week. Sputnik. The reference to 1957, when the Soviet Union launched the first satellite into orbit and America suddenly realized it was not, in fact, the unquestioned leader of the space race. Andreessen's tweet goes viral. By Monday afternoon, every financial news anchor on the planet is using the word Sputnik. Sam Altman, CEO of OpenAI, tweets a careful, measured response. He congratulates DeepSeek on a strong release. He says competition is good. He also notes, pointedly, that OpenAI is going to keep raising the bar. Translation: don't write us off. Jensen Huang, in a statement that gets picked up everywhere, calls DeepSeek's work an excellent AI advancement. Translation: please don't sell my stock. And President Trump, at a Republican retreat in Florida, calls it a wake-up call. He says America needs to be laser-focused on competing to win. The Trump administration starts hinting at even tighter export controls. The geopolitical implications are immediate. By Tuesday morning, Congress is talking about new AI legislation. By Wednesday, the EU is too. Throughout all of this, the man at the center of the story, Liang Wenfeng, has done basically zero Western press. He gave one interview to a Chinese tech publication months earlier where he said his goal was for China to develop foundational AI rather than just copy what came out of America. Suddenly, that quote is being translated and tweeted everywhere. Photos of him, a quiet, slightly serious-looking guy in his late 30s, start appearing in the Wall Street Journal, in the New York Times, in The Economist. He is now, overnight, one of the most consequential people in technology. He does not give interviews, he keeps building. While Wall Street panics, ordinary developers go on a downloading spree. The DeepSeek app, their consumer-facing chatbot, basically a Chinese ChatGPT, rockets to #1 on Apple's App Store in the United States by Tuesday. The model weights get mirrored on every major Hugging Face server. Cloud providers, Amazon, Microsoft, Together AI, race to host R1 for their customers. By Wednesday, you can be a developer in any country in the world and have a frontier-level reasoning model running in your app for a tiny fraction of what OpenAI was charging the week before. Now, the moment things settle for half a second, the counter-argument starts. Was that $6 million number actually real? A lot of researchers think the picture is more complicated. They argue DeepSeek likely benefited from distillation, using outputs from existing models like GPT-4 and O1 to train R1. They argue the 6 million figure only accounts for the final training run, not the years of research, the salary cost, the failed experiments, the prior models like V3 that R1 is built on. They argued DeepSeek's parent hedge fund had quietly amassed something like 50,000 Nvidia GPUs before the export controls hit, so the 800-only narrative undersells their actual infrastructure. All of this might be true. It might also be irrelevant. Because here's the thing, even if DeepSeek's actual cost was 10 times what they claimed, $60 million instead of 6, that's still 10 times less than what OpenAI and Anthropic are spending. Even if their effective GPU count was 50,000 instead of 2,000, that's still a fraction of what the leading American labs use. The qualitative point, that the frontier could be approached for less money, on weaker hardware, by a smaller team, survived the fact check. And once that point landed, the trillion-dollar trade had to be repriced. Wall Street, for one terrifying Monday, was forced to ask, what if the AI moat is not as wide as we paid for? And it isn't just DeepSeek. Within weeks of R1's release, every other Chinese AI lab piles on. Alibaba pushes out Qwen 2.5 Max, a model that benchmarks competitively with the American frontier. Also free, also open. Moonshot ships Kimi K1.5 with similar reasoning capabilities. Tencent, ByteDance, Baidu, every Chinese tech giant suddenly has a model in the conversation. The narrative that China's AI sector was years behind the US flips, almost overnight, into the narrative that China has built a genuinely competitive open-source ecosystem under sanctions. Whether you believe one narrative or the other, the trade can't be priced the same way anymore. In Silicon Valley, the response is a mix of defensiveness and recalibration. OpenAI rushes to ship its next model. Anthropic accelerates Claude releases. Meta, which had been pushing open-source Llama models, doubles down, framing itself as the American answer to DeepSeek's open ethos. Google DeepMind tightens up its own Gemini cadence. The Stargate project keeps moving, but the certainty around it has cracked. Suddenly, spend $500 billion to win doesn't sound as bulletproof as it did the previous Monday. Some investors quietly start asking the heretical question, what if the next great AI breakthroughs come from teams that are smaller, cheaper, and outside the United States? By the end of the week, Nvidia has recovered some of its losses, but not all. The stock closes the week down 13% overall. Microsoft, Meta, Alphabet all bleed across the week. Some of the names hit hardest. Constellation, Vistra, the power utility names, never fully come back to their January 26 highs for months. The AI trade isn't dead. It's just been recalibrated in real time by a hedge fund side project that nobody saw coming. The week after the crash, things get weirder. Anthropic CEO Dario Amodei publishes a long essay called On DeepSeek and Export Controls, in which he basically argues that R1 is impressive, China is genuinely competitive, and therefore, counterintuitively, the US should tighten export controls even more, not loosen them. Sam Altman, in a brief reply to a fan on X, says OpenAI will release a much stronger model soon, and that the world will see the gap is wider than people think. Meta convenes what one engineer leaks as war rooms. Internal teams whose entire job is to reverse engineer how DeepSeek pulled this off and integrate every trick into the next Llama release. By February, Llama 4 development reportedly gets re-scoped with DeepSeek-style efficiency goals baked into the spec. Whether or not you believe any of these stories, and Silicon Valley loves a leaked war room story, the cultural shift is unambiguous. R1 is no longer a Chinese curiosity. It is now homework. What changed forever in those 72 hours? 3 things. 1. Open source AI got legitimate. Before R1, the assumption was that the frontier would always live behind paid APIs. After R1, every CTO in the world started running open-weight models in production. 2. China AI got credible. The "they're years behind" framing died. It was replaced with "they're competitive and they're free." 3. The trillion-dollar moat thesis got punctured. You could still believe Nvidia was a great business. You couldn't believe its margins were untouchable. Picture the Stargate announcement room one more time. January 21, 2025. President Trump at the podium. Sam Altman to his right. Larry Ellison to his left, Masayoshi Son behind them, the American flag draped across the back wall. The vibe is unambiguous. This is the U.S. flexing its industrial muscle. We are going to outspend the world. $500 billion. Cameras flashing, CNBC running it as breaking news for hours. Now picture a small Hangzhou office on January 27, 6 days later, where Liang Wenfeng's engineers click publish on a Hugging Face page. No press conference, no flag, no statement, just an MIT license and a download button. And the second of those two events, the one without the cameras, moves more market value in one day than any single American AI investment ever has. Sometimes the most consequential moments in technology look nothing like the ones the newsrooms are pointed at. And let me pause on the cosmic timing of all of this. President Trump and Sam Altman announce a $500 billion AI infrastructure project on January 21. DeepSeek publishes the R1 paper on January 20. They drop the weights on January 27. So the literal week after America announces it's going to spend $500 billion to win the AI race, a Chinese hedge fund releases a free model that erases $1 trillion off the people the $500 billion was meant to help. You could not write this in a screenplay. It would be too on the nose. There's something specific about how this story broke that's worth pausing on. It wasn't a press release. It wasn't a Wall Street Journal scoop. It was tweets. It was AI researchers on X sharing benchmark screenshots, link dropping the Hugging Face page, dunking on the American moat narrative. The full repricing of the trillion-dollar AI trade happened basically in public on social media over a weekend. In the old world, a story this big would have leaked through a financial newspaper on a Tuesday and gradually trickled down to retail investors over weeks. In the new world, every quant desk and every retail trader had the same information by 9:30 a.m. Monday. The market efficiency on display was almost terrifying. If you're a founder watching all of this, building anything in AI, the message is loud. The barriers to entry are collapsing. The compute moat is shrinking. The data moat is more porous than the labs want you to believe. The geographic moat, we're American, we have access to the best chips, turns out to be a moat with holes in it. The only durable moat left, maybe, is distribution. Who has the users? Who has the integrations? Who has the trust? The model layer keeps commoditizing. The application layer keeps mattering more. If you're an investor, the story is humbling. The most crowded trade in modern markets, long Nvidia, long the American AI complex, got punched by a guy you'd never heard of, working with chips he wasn't supposed to use at a price you didn't believe was possible. The same investors who'd been paying 30 times forward earnings for AI exposure names suddenly had to ask if the next punch was already on its way from somewhere they weren't watching. Big lesson. When a trade is that crowded, the asymmetric risk is always sitting in the corner that nobody is looking at. And if you're a regular person, not a founder, not a trader, just somebody who lives in a world increasingly shaped by AI, the DeepSeek Week is a reminder that the levers of this technology are not concentrated where you think they are. The narrative had been, a small handful of American companies control the future. The reality, as of Q1 2025, is anybody with a few thousand decent chips, a sharp team, and patience can ship something that moves global markets. That is good and bad. It means the technology will spread faster. It also means the geopolitical surface area is much larger than the export control regime had assumed. So that's the story. A Chinese hedge fund decides to start an AI lab. A 39-year-old founder you've never heard of spends 2 years quietly building on the chips America said weren't good enough. He drops a paper on a Monday. He drops the weights the following Monday. By the next morning, Nvidia has set a record for the largest one-day loss in U.S. stock market history. $1 trillion of American AI valuation gets rewritten. And the assumption that this technology belongs to one country run by a handful of companies behind paid APIs, that assumption dies in the span of one trading day. If this earned the time you spent watching, a like genuinely helps the channel. Share it with one friend who'd love it. And if you want more long-form tech stories like this one, hit subscribe. It means a lot. Here's the question I want to leave you with. If a hedge fund in Hangzhou can crash the most crowded trade in American markets in 72 hours, what's the next sector you think gets disrupted by a team you've never heard of? Drop your honest guess in the comments.